Hello everyone, welcome to TalentSprint. In this session of economics, we shall discuss money market. So what do you mean by a market? What comes into your mind when I say market? So market is a place where buyers and sellers of different goods meet at one place. So if I say vegetable market, it is the buyers and sellers of vegetables will meet at one place. So if I say money market means buyers and sellers, we can't say buyers and sellers of money. We should say borrowers and lenders of money will meet at one place, that is called money market. Okay, so moving on to what is money market. So money market means it involves borrowing and lending of money for a period of up to 364 days. That means less than 1 year. So if I say it is money market means it involves borrowing and lending of money for a period of up to 364 days. That means 1 day to 364 days is a maximum time period for a money market. So for short term borrowing, people use money market. Suppose I have a doubt, if it is more than 364 days, it is called as capital market. So if it is less than 1 year, it is money market. If it is more than 1 year, it is called as capital market. In India, the regulator of money market is RBI, that is our Reserve Bank of India, the bankers bank. Okay, and moving on to the types of money market. So it is divided into two types. The first is organized money market and next is unorganized money market. What do you mean by organized? Why it is not unorganized? So organized means it is well regulated by RBI. Unorganized means it is not well regulated. It is not under the control of RBI. We shall see what are the tools under it. So moving on to the first type of money market, that is organized money market. So the tools of organized money market are, first is call money market, then treasury bills or T-bills, then certificates of deposit CDs, then commercial papers CPs, like that. So these are some of the tools of organized money market in India. So these are used for borrowing and lending of money in India under money market. The maximum time period is 364 days. Okay, so moving on to the first type of money market under organized money market, it is call money market. So what do you mean by call money? Call money means instant money. Okay, so what do you mean by this instant money? So when I should get instant money means I should get maximum within 1 day. That's why it is called as call money market. So what is this call money market? Call money market is used by banks generally to borrow from another banks. For every time I used to go to RBI generally. Now I want to borrow from my nearest colleague of another bank. So I can borrow from another bank. Suppose SBI want to borrow from ICICI 100 crores example. So I can go and ask ICICI and please give me 100 crores for 1 day. Then may say I'll charge this much interest. So okay, I'll give you that. Okay, so that is called call money market. Clear with this? So it is also called as interbank market. That's why, because banks are exchanging money, so that's why it is called as interbank market. So what are the types of money markets under call money market? If the time period is 1 day, it is called as call money market. That means I am borrowing money for only 1 day. On the second day I have to repay back with interest. Okay, the next type is notice money market. The time period is 2 to 14 days. That means above 1 day. I am borrowing for more time period, from 2 to 14 days. Next is term money market. If it is more than 14 days, that is from 15th day to the maximum time period in money market is 364 days. So this type of money market is called as term money market. So I am borrowing for 15 days to 364 days. Suppose I am borrowing for 6 months, it comes under term money market. Okay, so I have a doubt. Generally you don't have doubts, right? You are not posting anything in a student discussion, right? I have doubt. So what is my doubt? Suppose higher the time period, higher the interest rate or lower the interest rate? How many say higher the interest rate? How many say lower the interest rate? I say it is higher the interest rate. So because you are borrowing for more time period, Yes. So more time period means more interest should be charged on the individual who is taking the money. That's why more interest will be charged when you take for more time period. Clear with this? Okay. Moving on to the next type of organized money market, that is treasury bills. What comes into your mind when I say treasury? So treasury means it is related to government. Yes or no? So treasury means here the government borrows money from the public through T-bills or treasury bills. So generally government doesn't auction these T-bills. So RBI who auctions these T-bills on the behalf of Government of India. Clear? And there is minimum amount prescribed for us. What is that minimum amount? It is 25,000 rupees. Okay, so 25,000 rupees is minimum for a T-bill in India. Suppose if a person wants to give money to government, he has to give minimum of 25,000 rupees through T-bill. And T-bills may be issued on discount on face value. Generally, whenever we give money to anyone, okay, as loan or we charge interest, right? Here there is no interest, but it is called as discount on face value. What do you mean by this? Guess it. What is it? So discount on face value means, suppose I am borrowing 100 rupees. The interest is 10%. I have to pay back 110 rupees. Yes. So suppose instead of taking 100 rupees, I am getting it 90 rupees only. Okay, and while I am repaying, I will pay 99 rupees. So that is called discount on face value. And when I am borrowing the money only, I am getting discount. That is called discount on face value. Generally, it is followed in most of the tools in money market. Okay, so there are three types of T-bills in India. So first is 91-day T-bill, next is 182-day T-bill, and next is 364-day T-bill. What do you mean by 91-day T-bill? So the time period of borrowing is 91 days. After 91 days, the person has to repay back, the government has to repay back to the person. After 182 days, the government has to repay back. For 364 days, the government has to repay back. Clear with this? So moving on to the next tool of money market, it is certificate of deposits, CDs. So generally when I am opening a fixed deposit in a bank, have you observed they will give you some document saying you have opened a fixed deposit, they will give a small bond paper. So that is a certificate saying you have deposited some money. This type of certificate of deposits. Okay, so like that the banks borrow money from the public through certificates of deposits, and other financial institutions borrow money through certificates of deposits. Okay, it is written on a secured promissory note. Why it is called secured? Because banks are borrowing money. They don't elope with our money, right? Banks are secure because RBI is there to look after them. So that's why it is a written on secured promissory note, and the minimum amount to borrow under certificate of deposit is 1 lakh, and the amount should be borrowed in multiples of 1 lakh. Clear with this? And I should borrow in 1 lakh, 2 lakh, 5 lakhs, 6 lakhs, like not 2.5, not 6.5. Should borrow in multiples of 1 lakh only, and the minimum amount is compulsory 1 lakh rupees. Clear? And the minimum time period is 7 days under certificates of deposits, and the maximum time period is 364 days. That is the maximum time period of money market. Okay, and also the CDs may be issued on discount on face value. We already discussed earlier what is discount on face value. Clear with this? Clear about certificates of deposits? So we shall move forward to commercial papers, CPs. So earlier banks were borrowing through CDs, certificate of deposits. So here corporate companies and other financial institutions and other primary dealers, PDs, borrow through commercial papers called CPs. So as they are private companies, they are unsecured in nature. They may escape with our money. When we give money to them, they may be escaping. So that's why it is an unsecured promissory note. You have seen, I think, promissory note. Just it will be a document saying I am so and so person borrowing from so and so person at this rate of interest. I'll repay back after these many days. So both borrower and lender will sign, and there will be mediators. They will be signing on a revenue stamp. That is a promissory note. Okay, hope you have seen from your parents. Okay, and the minimum time period for a commercial paper is 7 days, and also the maximum time period is 364 days, and the minimum amount under commercial papers is 5 lakh rupees. Under CDs it is 1 lakh, but under CPs it is 5 lakh rupees, and the amount should be in multiples of 5 lakhs, like 5, 25, 30, 35, like that. Only in multiples of 5 lakhs I have to borrow the money or lend the money under CPs, and it is also discounted on face value. Clear with this? So clear about organized money markets. Next is unorganized money market. Why it is called unorganized? Because it is not well regulated. We shall see why it is not well regulated. When I give the tools, you will understand why it is called unorganized. Because suppose generally some local people are doing some business, so RBI cannot regulate them effectively. They don't have any license. Suppose chit fund is there, so local people do that. So it comes under unorganized money market. Clear with this? So under the tools of unorganized money markets, we have the first one as non-banking financial companies, NBFCs. Non-banking financial companies. And next is indigenous bankers. And next is indigenous lenders. We shall discuss about them. The first is non-banking financial companies. Why it is called non-banking? Because it is not into regular banking activity. What is regular banking activity? To accept deposits and give loans. So here they don't perform this. So that's why they are called as non-banking financial companies, NBFCs. So NBFCs are registered under Companies Act 1956. They are not registered under RBI Act of 1934 like regular banks. Okay, so they are registered under Companies Act. They are like normal companies, like the corporate companies under the Companies Act 1956. Okay, and the conditions for an NBFC. So when we study about the conditions, what they cannot do, so we can know that what they can do. Okay, the first condition is NBFC cannot accept demand deposits. What are demand deposits? Savings account and current account. So they cannot accept these deposits. That means they can accept term deposits. Okay, and next, they cannot form part of regular payment and settlement systems. Okay, they cannot issue checks, DDs, etc. That means I can't ask an NBFC to recharge my mobile like that. Okay, next is the deposit insurance facility, which is given by Deposit Insurance and Credit Guarantee Corporation, that is DICGC. It is a subsidiary of RBI. It is not available for the deposits under NBFCs. Generally 1 lakh is insured under DICGC. Even though if I have 1 crore rupees in my account, only 1 lakh is insured under DICGC. So that facility is not available for the deposits under NBFCs. So general examples are insurance companies, chit fund companies. So these are regulated by RBI only, but it is not 100% regulating. Suppose any local person, our relatives are doing chit funds. Hope some of your relatives may be doing chit funds. So they are not well regulated. They don't register themselves. They may be escaping with our money. Deposit means it is not a simple issue, right? We are doing a lot of hard work and getting money, and saving as a deposit or investing in chit funds. So if they escape with money, so who is responsible? That's why they come under unorganized money market. Very best example is there are public NBFCs and private NBFCs also. Government also maintains some NBFCs like IRDA, Insurance Regulatory Development Authority of India. It is headquartered in Hyderabad. So it is a public NBFC. It is secure because it is maintained by government. What about private? So that is the problem. Okay, some people are doing chit funds. All these things are unorganized money market. It is not well regulated by RBI. Clear with this? So moving on to the next tool under unorganized money market is indigenous bankers. So these perform banking activities without any license. So ICICI has license, SBI has license, Kotak Mahindra has license. So any person is doing banking activities, taking deposits and giving loans without any license. So these are indigenous bankers. They may be escaping with our money someday. There is a chance of escape. So these are coming under unorganized money market. Next is indigenous lenders. They perform lending activities without any license. They may be available at single phone call. I want 1 crore rupees. Okay, I'll give in half an hour. But while taking money, they'll show us the hell. Okay, so be careful about this. Okay, always invest in organized money market only. So hope you have learned enough things about money market. We shall meet in the next sessions. Thank you.